Hi, this is Paul from globaltradingsoftware.com, and this is a swing trading tutorial using our swing trading bundle, but mainly the Elliott Wave indicator suite. This is where it all started for me really, and it continues to do so because it just keeps throwing out some great trades, trading that fifth wave move. So first of all, I just want to discuss this. This is the Think or Swim platform. You can see the Elliott Wave indicator suite. It was already on there with the waves labeled, the 1, the 2, the 3, the 4, and I go through everything else there. The main thing I want to just talk about to begin with though is we have a very corrective type of sequence before this main trend. So we can see you've got ABC corrections in there. So there's no trading opportunities there. Now there are other trading opportunities that come in and gets us there, and we use other indicator suites to get in early in the trend. I'm not going to talk about those today. All we want to do is when we're identifying a trend, we can see an obvious trend. We isolate the wave count down the lows, and then the Elliott Wave counts it: a 1, a 2, a 3, and a wave 4 pullback. We can see this is a major pullback against the main trend. It's this that we're interested in right now, nothing else. The trend has happened, it's pulled back against the trend, and we want to get back in the trend and trade this fifth wave move. So wave 4's pulled back, and it's pulled back into the green zone of the probability pullback zones. That if that support holds and it starts to move away, there's an 85% probability it's going to go on and hit that fifth wave automated target zone there. So really good probability. Amber is 80, red is 75. You'll also see some EMA clouds. This grey cloud is the 55 EMA, and the purple is 89. You can see this is what we call a non-linear support and resistance zone. So you can see the wave 4's pulled back into that linear fib zone, that green zone on the pullback zones there, and also it's finding support at that 55 EMA. And I use 55 on this daily time frame because it's a very strong EMA cloud. Also the 89. Again, the EMA cloud's part of that swing trading bundle. We also like to look at the behavior of that wave 4 using other indicators within the suite. So we've got this Elliott Wave oscillator here, and we've measured between 90 and 140 this wave 4 pullback on the oscillators just on the 140. It's got to start pulling back up now, but that behavior is brilliant. Then we've got the false breakout stochastic. So the yellow lines on the top denote a really strong bullish trend. Then when we pull back against that and crossing the oversold zone on the wave 4, that fifth wave is a high probability move because that behavior is as we would expect. And Elliott Wave is all about behavior. It measures those and identifies those waves. We've had the wave 4 pullback. We're looking at the behavior of those waves with other with the oscillator, with the pullback zones, with the false breakout stochastic, but also in the middle of the false breakout stochastic we've got a bias indicator. When it's green, it automatically looks up on the weekly time frame and it's telling me that there's a bullish bias there. At the moment it's yellow, so it's a neutral bias. Okay, it doesn't mean that we can't get in a trade, it just means that I would like, when we get that signal, that trigger is that we want to go back to that bullish bias on that higher time frame, on the weekly time frame. So put all that in, we've got some great behavior. NUE, Nucor, is what we're looking for that fifth wave move. Now there are alternatives to entry strategies here. So we're close to the $100 mark, and that is a bit of an emotional level, if you like. If we can break through $100, traders will see that value, and the stampede will happen, if you like. There's more volume will come in and it pushes towards that fifth wave move. I've put this Scion zone in here because you can see this 100 did really act as good support during this wave 3. If we can push through there and get an entry around $100.30, I think this would be a good high probability move to that fifth wave target zone. But the target around about 116, and that risk to reward is 1 to 2. So if we had our stop just below the wave 4 pivot here around about 92.58, the entry $100.30, that risk to reward is 1 to 2 to that fifth wave target zone. Fantastic risk to reward. We're above that linear support and resistance zone. Now, if we go in that today, we are outside of this regression trend channel, which is good. So that's what we call an aggressive entry. We would like to see this, when the market's open today, this bias go green. That means on the weekly time frame we are bullish bias. If we go in on Friday, we can see that the entry is just breaking our 6-4 moving average high. So this is part of the Elliott Wave indicator suite, and this gives us that conservative entry. Now, we have to have the order on just in case we have a really big move up. I mean, some of these big bullish candles you can see on the wave 3 could be repeated here. So aggressive entry would be today, and then a conservative entry, probably see that price action coming up today and then put the order on for $100.30 to go through that 6-4 moving average high for Friday's bar position. So you've got some alternatives there. For me, I would like to see this close above 100 and then look to enter. So, if we had a scenario where we further tested this today, like so, let me just bring that to the front and make that a green candle. Will it? No, it won't do it. Okay, so if we, and then the following day we get a close above there, that's where I'm interested in going along above the high of that candle that closes above. So that's me personally. Again, entry and risk management is very personal. Some people like to get in very early and aggressive so they can reap those better rewards, but the danger is it hangs around this $100 and it comes back down again and we get a slightly lower wave 4. For me, I'm more conservative. I'd like it to break and close above this zone and then go. I've still got a great risk reward up here, so I'm going to see what the price action is today. If we get a real good strong volume coming up through $100.30, I may just enter today, but if we don't and it's struggling to get through here, I want to close above. It may be even next week when I enter, but so that's how I've set it up. I've used the Elliott Wave indicator suite to identify that pullback of that main trend. Let's zoom out again just to remind you. So we've got a main bullish trend, we've pulled back, and then we've measured the behavior of that pullback with lots of different things. With the automated pullback zones, part of the Elliott Wave indicator suite, with the EMA clouds, part of this swing trading bundle, and I'll give the links in the description below. Then I've used the Elliott Wave oscillator to measure that wave 4 performance, and also then the stochastic. So the behavior of this is extremely good. We've got a good target around about $116 for that automated 5th wave target zone. So with that stop just below the wave 4, we've got a great risk reward. If we were to go quite aggressive, even if we went conservative on Friday or Monday, I think we'd still get a great risk reward. But we don't know what the price action is today. We can only look left, we can't look right on a chart. We've not got a crystal ball. So this is a good looking trade. Everything's setting up well. Let's see how this progresses over the next couple of days. Hopefully this helps. Please subscribe to the channel. I do videos almost every day, going through all the different indicator suites that we have on globaltradingsoftware.com, and giving these tutorials on how to use them, how to get into trades, and be successful using these trading indicators. Have a great trading day. Speak to you all really soon.